Good morning, traders, and welcome to the Asia preview, the North American wrap from PrivateerFX. Let's get right to it. It was a big day in the currency space. Obviously, the highlight was the ECB meeting, and what a day it was. You can see here on the hourly chart, and we'll go into some detail there. Draghi came out at this morning and pretty much as expected from most of the market analysts, halved his asset purchases from 60 billion a month down to 30 billion a month for the next 9 months till the end of September 2018, and he kept his options open for an increase in size or duration. Bunds obviously rallied. You can see the euro here on the this was at right at the 6:45 Central Standard Time. The initial move down, we were trading 118.10. We got down to 60, rallied back up to 85, and then as he started speaking, that's when the sell-off really started gathering some steam. Most of the analysts out there were saying that he delivered a by having the QE pace, but signaling a slow exit from quantitative easing, and delivered a dovish a dovish result today. So a couple of headlines that were coming out during his Q&A. He mentioned that economic outlook still reliant on ECB support. That's dovish. He says domestic price pressures remain muted. Their expectations for inflation next year is 1.2%. They're currently at 1.5%. They're trying to reach their target of 2%. Bank of Japan has been trying to do this for, give or take, since they announced their first quantitative easing and their zero interest rate policy, and none of these central banks are able to achieve this 2% target. He also said that there's ample degree of stimulus still needed. So the market, after listening to the Q&A, decided that he was sufficiently dovish, and they were going to start selling the euro in earnest. And you can see this hourly bar from this 117.60. This was a break level that we had here at 117.50, just through some of these hourly lows. We got through it. It popped back up, and then the next time through, it was pretty much straight line. Our bigger break level, I think we highlighted this on the 240s. It goes back a bunch of lows down here at 117.25. That was clean, and as you can see, the next hour's bar, the high was right there. And then it just kind of was grinding lower for the next 6 hours. And, the break, the 117.50 break was not great, but the 17.25 break was perfect, and it never looked back. You're seeing it bounce here a little bit on the Asian Open after closing down at 116.45, and 116.40 is low. And we'll take a look at the longer term charts just to show the significance of this level. One interesting headline that came out in the afternoon, just a complete classic. So euro dollar is down at this 116.60 neckline, and let me show you the chart here that we drew on the dailies. So this is the head and shoulders, the left shoulder here, the head, the right shoulder here, little triangle formation. We also have the 100-day moving average here at 116.70. Right as price breached this neckline that every technician is looking at, every analyst has been talking about, it traded 116.59, and a source's headline from the ECB came out and said the ECB is said to see option to end QE with a shorter taper in 2018. You cannot make this shit up. The euro printed 59, traded back up to 85, and then continued lower. It seems too much of a coincidence for that to come out when it did, right as we were approaching this massive level. After the bell, we also had some very strong. Amazon and Google had big time earnings beats, and stocks rallied a little bit there late in the day, or just after close, the futures were rallying up. Take a look at Aussie here. This is another one. Let's get to the right charts. Bear with me. So here's your Euro daily chart again, the neckline. Showed you that. Let's move over to the Australian dollar, which is just offered like the wind. It cannot bounce. It's on 1, 2, 3, 4, 5 straight down days. It's dropped a couple percent. Kiwi has dropped 6% in about 8 days. And as you can see here, this Aussie chart closed again right on the lows of the day. Take a look at this daily. You can see the 100-day and the 200-day moving average. This is the first time we've closed below the 200 days since June of 2017. We also have an old important low down here back in June, which is my target for this move. This is a decent miss, a decent violation of the 200-day moving average. So we're expecting more weakness here, a test of these June lows, and into year end we think that we will be lower than where we were at the beginning of the year, and this was last year's closing price here, 72. I think we have a very good chance for the next 2 months of closing close to, if not below, last year's closing price. So this is on our radar, and we'll continue to monitor. Let's take a quick look at some of the other daily reversals that took place today. Well, here, let's start with a couple other break trades. Here's an hourly euro yen chart. So just broad euro weakness. Euro Aussie was even lower today after making 2017 highs. This was a clean break, 133.10 through a bunch of lows. As you can see here, spiked a little bit back above, and then it did sell off about 30-40 points. That was pretty clean, not much pain. Dollar yen is kind of interesting with the yields higher. Here's an hourly head and shoulders. Not a perfect head and shoulders, but something to look out for on a potential risk off move. Maybe this neckline here, 113.40, goes at some point. And then moving over to the daily charts, to the reversal patterns, you can see here this is no reversal here, but you can see what Bank of Canada was dovish on this bar. We took another leg up. We also took out some resistance area in here. That remains pretty well bid. So the commodity currencies are really, really struggling with these higher yields. And dollar EM, like we stated last night, is still very strong. Dollar Turkey, dollar Rand, dollar Mex, all much higher on the day. Here's an outside reversal day lower in the euro. You can see this, a new high. Took out several days of lows. Took out the NFP low back on the 6th, and violated this neckline. So it's an extremely bearish. We expect follow through. A lot of targets for this move are in the 114 handle and the 112 handle over the next couple of weeks. Even Euro Swiss, one of the strongest uptrends we've seen in Euro Swiss, making new highs since the S&P pulled the floor. Big time outside reversal day lower, closed below these old highs. This was kind of a breakout here at 116.24. So we're trading there right now. And that if you take a look at, here's dollar Singapore, dollar China and dollar Singapore both had outside reversal higher days. This is a huge level in dollar Singapore. So if you start seeing higher U.S. yields, these Asian currencies are going to continue to be under a lot of pressure. So We like this break here above this 137 area for a retest of 139ish back in the summer. So once again, the dollar has been strong and it continues. The dollar index has taken out these old. Let's see the dollar index chart here. It's taken out these old highs here at 94.24. Pretty good break. Traded about 40 cents above there. So we're expecting more dollar strength. We've got U.S. GDP tomorrow, which will be key for the next percent or so in the dollar. I guess if we do get a weaker GDP, then maybe we start seeing a little bit of a correction of this recent dollar index move, and Aussie and Kiwi that have just been completely decimated would probably be good candidates to be long if the U.S. GDP number is weak. Markets generally don't make lows on Thursdays. You're in your last trading day of the week. I wouldn't be at all surprised to see Kiwi continue a little bit lower here in Asia. Aussie dollar, same thing. Euro, same thing. And then, I think maybe a little bit of choppy sideways price action throughout London and into the New York Open prior to the US GDP. Have a great weekend. Keep an eye out for our European and North American Opens and a slightly longer video over the weekend to get you ready for trading next week. All the best.